Hello, listeners. Welcome to the podcast. I am David A Asiedu, a partner in the dispute resolution practice at the Accra office of ENS. Let's start with something we've all seen before. You do the work, send the invoice, and wait, and wait, and wait some more. In some business environments, payment terms seem more like mere polite suggestions than actual timelines. And by the time it dawns on you that this money may never be paid, the taxman has already knocked, expecting you to pay tax on income you've earned and received, and also the income you've earned but haven't even received. That's a double blow. No cash in hand and a tax bill on top. Today's episode is all about bad debt, what they are, how they mess with your tax position, and more importantly, what you can do to get some relief. Because under the right conditions, the taxman might just let you write it off. Cletus Banseh, a partner in the tax practice at the Accra office of ENS, returns as our guest in this installment of our tax audit series. Welcome back, Cletus.
Thank you very much, David. It's great to be back in the tax audit series and happy to proceed with this segment.
Let's jump in then. Sometimes a sale looks good on paper until the customer doesn't pay. What exactly is a bad debt? And why does it matter when it comes to paying taxes?
David, generally a bad debt is a debt that has not been recovered after reasonable efforts have been made in recovering it. But that is just in simple terms. Mm-hmm. We have what the taxman will say is a bad debt, and we have what the accountant will say is a bad debt. You know, tax will generally follow accounting until it finds the path unpleasant and then depart. So the taxman is usually not, or tax is not a loyal servant or follower of accounting, although tax will follow generally accepted accounting principle. But what it does, you ask what bad debt does. It hits your profits if you are not able to get a deduction, because you would have included that income which has not been recovered yet in your taxable income and pay tax on it. So if you are not able to recover the debt and you are not able to deduct it as an allowable expense, then you would have paid tax on an amount which you haven't received, and therefore your profit goes down. But we will, if you want me to give what the taxman will say is a bad debt, I can proceed with that. Or you want us to proceed and at a next stage, and then I'll give what the taxman will say this is a bad debt.
Yes, let's do it this way. If the money didn't come in, it feels like common sense, to me at least, that you shouldn't be taxed on it. The money didn't come in. Surely the taxman gets that. So can a business just go ahead and deduct a bad debt? No questions asked.
No, it won't work that way. Like I said, the taxman's understanding of a bad debt is quite different from the simple definition of a bad debt. For a taxpayer to be able to claim a deduction of bad debt, the taxpayer must prove that that amount has been included in his taxable income, and he has made reasonable efforts in recovering the amount or the debt and has not been successful in recovering that debt. What constitutes reasonable efforts is also spelled out, and the taxpayer must comply with what constitutes reasonable efforts in order to be able to claim a deduction. But for a debt to be described as bad debt, that debt must be as a result of a situation where if the debtor is an individual, that individual has died and has left no assets from which to recover the debt from. And if the debtor is a company, then that company is insolvent or liquidated and has left no assets from which the debt can be recovered from. Or where that debt is statute bar, and David, you understand what to me when something is statute bar, you cannot recover it from the debtor. Or you have taken legal action, that's by way of litigation or arbitration, negotiation to recover it, and you have not been successful. That way, the taxman will say that debt is bad debt. But the conditions that you have to satisfy are that you have followed your company's credit policy in arriving at the decision to call that debt a bad debt. For example, if your company requires that the board must approve the debt, the bad debt before it becomes a bad debt, then you must show evidence that the board has approved it. I can move to the next principle, but
no, go ahead.
So the second one is whether you have made use of licensed debt collectors. You know, we have debt collectors who can assist you to collect a debt if, you have a debtor who is recalcitrant and doesn't want to pay.
This thing about licensed debt collectors, are you saying it's an express rule, or are you saying it's a practical thing you must do because the taxman, when it comes to audit, you will be looking out for it?
It is a practical thing, and it doesn't mean that every debt you must make use of a debt collector, but it's an example that you have taken sound commercial reasons or consideration in trying to recover that debt. So if somebody goes to hire a licensed debt collector, you would have noticed that the person is serious and has made serious efforts in collecting that debt. So one other way is to restructure that debt or reschedule the payment arrangement. For example, for a loan from a bank, if the bank is struggling to recover that debt or loan, it can restructure the debt to allow the borrower to be able to pay, or reschedule the payment to enable the borrower repay. Or you can, if it comes to you have no other option, then you have to take legal action by way of litigation or arbitration or negotiation to recover that debt.
I'll come to you on that with a question.
Yes.
But I'm pretty certain I have heard you before say that when it comes to bad debt, there is essentially an additional layer as far as the conditions are concerned for financial institutions. Can you talk about that a little bit?
Yes, for financial institutions, the law actually adds an additional layer that must be satisfied before you can claim a deduction. So the financial institution must provide evidence that its board has approved that debt and has declared it as bad. And in addition to the approval of the board, the Bank of Ghana must also approve and declare that debt or approve that debt as bad. So the taxman will request for evidence of a resolution of the company approving that debt is bad, and also the evidence that BOG or Bank of Ghana has approved that debt is bad. Then the taxman will then look for the other conditions to see whether to treat that debt as bad and therefore allow a deduction in respect of that debt.
These rules you talk about, Cletus, they sound strict as tax rules always do. But in real life, things aren't always black and white. When it comes to bad debt deductions, are the conditions set in stone or are there any exceptions?
The conditions are not set in stone. We live in a flexible world, and the taxman knows that everything is not the same, or every debt, a debt that is up to $1 million is not the same as a debt that's 50 Ghana cedis or $50. So the measures that you will use to recover a $1 million debt will not be the same measures that you will use to recover a $50 debt. So, for example, the point on pursuing litigation in court or arbitration, nobody will go on arbitration to cover a $50, even though there are exceptions we have case law in UK and others where people have litigated debts that are around $50. But practically, you do not expect that an example is this quick loans where the mobile money companies give those quick loans at 50 Ghana cedis, 30 Ghana cedis loans to subscribers. You do not expect that they have to go to court to litigate over a 30 Ghana cedi loan that has been given to a subscriber. But the taxman will expect that if that is your mode of business, then you must have a way in which you check defaulters. For example, that if you default, then you are not able to borrow again, or if money enters your wallet, that money is automatically swept and therefore the bad debt is recovered. So if you provide those measures, then you would have satisfied the requirement that you've taken sound commercial considerations.
Got it. This is my final question. You touched on it in passing, but I still feel I should ask you. So some people believe that you have to sue first. You have to go to court before it will become a deductible bad debt. Is going to court necessary before you can claim a bad debt deduction? Or are there other ways short of court? For example, some of the other measures you've just described.
Going to court is just one of the ways in which you must prove you are able to prove that you have taken sound commercial, or you've made sound commercial considerations in pursuing recovery of that debt. So if you have a debt of $500,000 or the $1 million debt, you certainly must show evidence that you've gone to court or you've taken arbitration to recover that debt. You can't just say that I have made follow-ups and have not received payment, and that is it. You can't do that. But if you have a debt of even, let's say, 2,000 Ghana cedis, it may be difficult for the taxman to say that you should provide evidence that you've pursued that collection in court. So going to court is on a case-by-case basis, and it depends on the volume or the amount involved as the debt, and that will determine whether the taxman expects that you should have gone to court or not.
Got it. That's about the last question. So that's it for today's episode. Listeners, thanks for tuning in. If you've ever been stuck chasing unpaid invoices, I hope this has helped to clear the fog a little bit for tax purposes. We've talked about what counts as bad debt, the strict but not inflexible conditions for claiming a deduction, and whether dragging someone to court is really necessary before the taxman gives you a break. Knowing the rules puts you in a better position, not just to stay compliant, but to protect your bottom line. I am David A Asiedu. Our guest has been Cletus Banseh. If this episode felt familiar or useful, share it with someone who might need it and subscribe so that you don't miss another one. Until next time, keep taking reasonable steps to recover your debts. and to document each attempt carefully. Thank you. Bye-bye.